Hey everybody, what's going on? It is James here with Crypto Common Sense, and I wanted to sit down this evening and shoot a market update video. This is more of a long-term macro view video talking about kind of planning ahead and areas of interest that I'm looking for in the future. I did videos like this in 2019 talking about being interested in Bitcoin if it fell down to certain levels. Those levels came to be, and then of course, I didn't act on them the way I should have because of COVID. So live and learn, right? That's all we can do is live and learn and make sure that we make plans in advance and that we stick to those plans unless there's a logical reason to deviate from those plans. So I'm going to lay out some zones that I'm watching on the stock market and also on Bitcoin in this particular video. Before I jump into the content, do me a huge favor, hit the thumbs up button. Make sure to subscribe to the channel if you haven't already. And of course, don't forget to check the description for a link where you can join my Patreon for just $17 a month. That helps to support the channel. Also, there's a link down there where you can join my core trading course for just $997 a year, $997 a year. And for legal reasons, let's go ahead and get this out of the way as well. I am just some guy sitting in a spare bedroom. I am not a financial advisor. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. Okay, so let's take a look at some charts. First chart we're going to take a look at today is going to be the QQQ. All right, this is the QQQ. This is a 4-month chart. Okay, why 4 months? Just easy to see everything. Okay, there's not some magical trick to the 4-month chart. But basically, anytime a market runs up and gets too far ahead of itself, one of the most logical places to look for long-term investments is going to be that golden pocket, that 61.8. It's also a really good place to look for short sometimes in certain markets, which I'll show you real quickly, but we're not going to focus on that today because it's done and over with. So for example, if you had been watching this like I was, you might have said, hey, this move down, and hey, this bounce is not a real bounce, it's actually a dead cat bounce, and I should probably look for shorts in that zone. And if you had done that, of course, you'd have got it just perfect, and then boom, huge dump, right? Historic dump. I don't know that I would say historic, but huge dump, 14% over the last few weeks. The QQQ, which is an ETF for the tech stocks, it is at its lowest level in over 52 weeks, okay? So golden pocket, super powerful stuff, but it works both ways. It also works for long. So if we take a look at this macro move from 2008's bottom back here to the top in 2021, our golden pocket is actually between the 61.8 and the 78.6, okay? And that's a place where I would be very interested to look for long-term investments. Those are investments that do not have stop losses. They're investments that I plan on sitting on for, say, 20, 30 years, those types of investments, all right, or until the next, what looks to be a bubble forms. So if you think about this, that zone makes logical sense from a Fibonacci level perspective, but also from a support perspective. This is will be retesting the old highs if it got to the bottom of that zone, also retesting this consolidation around this area here. The top of the zone had a little bit of consolidation as well. So somewhere in that zone is where I would be interested to take long-term positions. And from the top, it has to drop about 58% to get to the top of the zone and about 74% to get to the bottom of the zone. And of course, if it does end up being like the dot-com bubble and falls 83%, that'll take it below that zone. But again, you're talking about long-term investments. Eventually, it would be unlikely that the QQQ, not impossible, but unlikely that the QQQ would not go back up in the future, okay? So that's what I'm watching on the QQQ. I know some people will say, that's just not going to happen. That's super far-fetched. It's a silly idea to even talk about. Well, I would disagree with you, but I'll get to that in just a few minutes. So there's the QQQ. Here is the SPX. So if we go from the bottom 2008 to the top, this is where that zone would be at, 61.8 to the 78.6. And again, it makes perfect sense. There was a double top in 2000 and 2007, and that would simply be coming back down and retesting the top of that zone if it got down near the bottom of that box. Makes perfect sense. If you measure it from the top, that would require a drop somewhere between 53% and 67%. The two previous market crashes resulted in a 50% drop after the dot-com bubble and a roughly 57% drop in the housing bubble. All right. Now we're in this quote unquote everything bubble. And so again, I think that's a realistic target. If we take a look at the DIA, which is an ETF for the Dow Jones, same type of thing. We can draw it from the bottom in 2008 or 2009 in this case, around $64 a share, all the way to the top in 2022. And if this was to retrace to that pocket, we'd be back down in this zone. Again, retesting these old highs back here would make sense from a technical analysis point of view. In the dot-com bubble, it fell about 38%. In the financial crisis, fell about 54%. And of course, to get back down in the zone required 50% to 65% drop. So pretty big. To put it in perspective, by the way, if you're curious how that compares to the actual Great Depression, we can look at that real fast. So this was the actual Great Depression. It actually fell about 89%, okay, and came back down and retested all these zones back here. From a Fibonacci point of view, it went well beyond that pocket, okay? And I wouldn't have drawn it from the bottom back here. I would have drawn it from right here. It actually went below the entire fib levels, okay? So those are three stocks. Again, before these things happen, it always looks so far-fetched, but let me give you a couple examples to compare this to. Netflix is a great one, okay? Obviously, Netflix, well, we'll start with Bitcoin, and then we'll look at Netflix. This is Bitcoin, right? This is the Bitcoin chart back in 2017. Of course, it ran up from roughly $98 here in July. Ran all the way up to nearly $20,000. Everybody probably knows that by now. You can see I drew these fibs here from here to here. And the golden pocket was between the 61.8 around $7,600. And the 78.6 was around $4,300. You can see it came down, slipped just below it. And that was the bottom, of course, in December of 2018. Fourth quarter 2018, that was the best time ever to buy Bitcoin in this last cycle. Okay, if you look at it, you can see here, came down, tagged it, and then boom, right up out of it. And in fact, if you look in the first quarter of 2020, that's all it did was basically retest the bottom of that box. So there's an example, past tense example. We can say, oh wow, that really did work that way, didn't it? So if we look at Bitcoin right now, I would be drawing this from here because this had a retracement. So I'd be drawing it from the bottom in March of 2020 to this top over here, all right? Because this did not quite get to the 61.8. See how it tried to get close, right? Everybody was thinking that was crazy. It was never going to go back down to that level. Well, it did. It just missed it. So now we can draw this over here like this. That puts our 61.8 around 28.7, puts our 78.6 down around 18,000. So again, you're talking about a long-term investment type of investor may start looking for long positions in that box. I think Bitcoin will go lower, but again, we're talking long-term. People who believe in Bitcoin and think it's going to go back up someday, that's where they may want to start looking for some positions. Makes sense from a technical analysis point of view. That would go down and again retest that top in the previous bull market. All right. Again, when it comes to Bitcoin, I think more likely going to see $8,000 to $12,000 before it's all said and done. But again, to give you an idea of another stock, because obviously everybody seems to think stocks are different from crypto. They're not. The exact same stuff works. This is Netflix, of course, in its bottom in 2012. They went through this crazy debacle where they tried to split the service up. It caused the stock to crash. Stock crashed about 82, almost 83%. I don't know why I didn't buy it back there. I was watching it unfold, but I didn't know anything about investing, so I didn't buy it. Fell down to $7.54. And of course, this bubble, it ran up to $700.99, a nearly 100x return over the last 10 years. And of course, when you drew this up, if you didn't have the benefit of hindsight, it would look pretty crazy. If I told somebody a month ago, hey, I think Netflix will be under $272 this year, and maybe even as low as $155 this year, people would say, you've lost your freaking mind. But now we know that's literally what happened. Bam, Netflix straight down, right back into that golden pocket. Okay? Not saying it stops there. There's no way to tell you exactly where it's going to stop. Nobody knows that information. Anybody that says they do is full of crap. All right? They're delusional. I'm saying that if somebody believes in Netflix for the long term, this may be a place where they can start cost averaging into a position. It does not mean that it will work out. It does not mean that it will ever make them money. Netflix could go to zero for all we know. They could go bankrupt for all we know. But it does make more sense. You set yourself up for a higher probability of success when you're buying huge pullbacks like that versus chasing down markets. Think about all the people that are in real trouble right now. To put this in perspective, guys, let me put it on a monthly chart. To put this in perspective, the people who bought Netflix, every single person who opened a new position on Netflix over the last 3+ years is now underwater. That includes the people who bought the perfect, and I mean perfect, bottom in March of 2020. If they didn't sell or take profits, they're now underwater. So they went from being up 141% to being negative. Every single person who bought after January of 2018 is now in the red. That is 4+ years of gains wiped out in a matter of months. And that is what happens when bubbles pop. I know last year I got a lot of grief for being so bearish. People did not want to hear it, or some people didn't. They thought that I had lost my mind. But there is a saying in markets. Markets take the stairs up and the elevator down. And this is why it's so damn dangerous to trade without stop losses and to get into the mindset that it's okay to just throw money at the wall because eventually what goes down must come back up. That's not always the case. They don't always come back up. Sometimes they just keep going down. All right. So I wanted to do this video. I'm going to keep it short. I don't want to go off on 15 different topics. I just want to say that I'm not a hater of markets. I love markets. While I'm bearish during a bear market, you better believe when I start seeing assets, whether it's stocks or cryptocurrency, if I start seeing them put in bullish structure while inside of this zone, I will be hunting for positions. That is what I said I would do on Bitcoin in 2019. I said it over and over and over. I said I'm going to wait for Bitcoin to put in bullish structure inside of its golden pocket. And then I never did it, right? Because of COVID and because of fear and because of emotions got in the way, I only bought back some of my Bitcoin instead of all of my Bitcoin, okay? But look at this. I mean, granted, it fell over here and that's, whatever. It did hit the $4,000 level, but even if I hadn't waited quite that long, there was bullish structure on Bitcoin all through here. Double bottomed right there, okay? So I could have been buying back my long-term investments. I'm not talking about trades, okay? Trades would have been stopped out. I'm talking about long-term investments, the investments that I sold between May and June of 2019, which I sold for an average of $8,800 is where I exited my Bitcoin positions, right? I started selling way too early, and so I didn't have the greatest cost average in the world, but could have bought all those back and then some down here in this pocket for around $7,000 to $7,500. I didn't do it, okay? So this time around, I will not make the same mistake. I will approach it with the correct mindset, which is long-term investments are long-term investments, and trying to catch perfect bottoms is a fool's errand, all right? Hope you guys enjoyed the video. If you have any questions, be sure and let me know. Make sure you do give the video a thumbs up. Make sure you do subscribe to the channel. And of course, make sure to leave comments. I'm not getting very many comments, and those comments really play a huge role in how much love YouTube itself gives the videos. And if YouTube gives the videos a little attention, that helps to grow the reach and helps to grow the channel, and then of course justifies doing more content like this. So this is James with Crypto Common Sense reminding everybody to please trade safe, and we'll see you in the next video.